Hello everyone, I'm Jerry D'Ambrosio and welcome to this week's special presentation, The ABCs of Short Selling. We've done presentations on short selling before. It still seems to be something that traders are confused about. They still don't understand the whole concept of selling something that you don't own. So we're going to review a lot of those concepts here today. And we're going to really talk about the VectorVest edge and how VectorVest makes it really easy not only to profit from short stock positions, but how to identify the right ones. So some key points of short selling. Short selling occurs when an investor borrows a security and sells it on the open market, planning to buy it back later for less money. So what you're doing, or your broker is doing, is he's lending you shares of stock that is currently in their inventory. They may have to go out and get it from other institutions if they don't have the inventory. But most brokers have a certain amount of shares of stock in their inventory that they kind of allocate towards letting investors borrow to sell short. So they lend you the shares, you bet on the stock price falling, and you profit from a drop in the security's price. This can be contrasted with long investors who want the price to go up. So you're betting on the stock price to go down, you're selling the shares that are borrowed out in the open market for particular price, and the hope is for the price of the stock to fall so that you can buy back the shares, return them, and pocket the difference. We'll go over some of these examples in a little bit as well. Short selling has a high risk to reward ratio. It can offer big profits, but losses can mount quickly and infinitely due to margin calls. We'll talk about margin calls a little bit. But this was taken from an article written by Adam Hayes on March 14, 2023 from Investopedia, great website. Title of the article is called Short Selling, Definition, Pros, Cons, and Examples. So this is just some key takeaways from that article. I would suggest that you go and read that article. He goes through a lot of different facets of shorting stocks. So some shorting requirements. First, you need to open and fund a margin account. This serves as collateral. Remember, you're selling shares of stock that you don't own. So how are losses covered? Well, they're covered from either the cash in your account, equitable positions that you can transfer to an account, or just the open positions that you have in the account. Those can be sold if a margin call is given. Margin call means that you have not met the maintenance account value in that margin account. Once that happens, shares of stock that you currently own in that account might be sold off, or you'll be required to transfer and deposit more cash to cover the losses. Goes without saying here, there's a lot of ins and outs to short selling. You want to make sure that you know all the rules and fees associated with the transaction. Firms have different rules and borrowing fees, so it's very important that we understand what they are. You want to know every step of the way what might happen if the stock's price goes up, down, doesn't move for an extended period of time. You want to make sure that you know every step of the way before getting into any short stock positions. Once you do that, the next step is to identify short sale candidates. As always, with the VectorVest edge, you want to make sure that the market's falling. We're going to give you clear, explicit market timing signals that'll let you know that market's either rising or falling. And I'm not saying that you need to use, when short selling, you need to use one particular market timing signal. Always use the DEW, always use the confirmed down signal. When the market is falling, when there's a red light in the price column of the color guard, an RT kicker combo down signal, a DEW, a confirmed down, even a primary wave down, those signals are telling investors not to buy stocks. So the other option is either to do nothing or short stocks. Shorting stocks can be kind of utilized a couple of different ways. One, of course, you want to profit from the market falling. The other way is to apply a short stock position as a hedge to current long positions in your portfolio. I think the current market has introduced that or allowed us to do that recently because we've seen a clear rollover and bearish market timing signals have come in, a bunch of RT combo signals. We got a DEW, got a confirm down. So hedging long positions in your portfolio is, I think, the more common approach to selling stocks short. But you want to make sure, no matter what your objective is, that the market's falling and we're giving you a bearish of some sort market timing signal. So next is you want to favor overvalued stocks with poor fundamentals that are falling in price. This is the mirror opposite of what we would suggest to do when the market's rising, right? We advocate buying safe, undervalued stocks, solid fundamentals that are rising in price. So you want to identify these stocks, and again, with VectorVest, we make it very, very easy to do. You also want to identify your entry and exit before entering the trade. Know your confirmation level. Know your exit criteria, your stop loss. No matter what stop loss you're using, you can use a lot of different stop losses, right? Profit Locker Pro, trailing stops, percent gain losses. You can use the chart to identify areas where you may want to cover the short position. That's what it's called. When you close a short position, you're covering that short position. You're buying it back to close the position. But you never want to risk more than 1 to 2% of the total portfolio capital on any single position. So no matter where the stop criteria is on that stock, don't risk more than 1 to 2% of the total portfolio capital on any one of those positions. Next is to initiate the short stock position. Once you've identified that the market's falling and utilized VectorVest's core fundamental indicators to identify poor, overvalued stocks falling in price, next step is to initiate the trade. You want to sell short X amount of shares and use a limit order. That helps you better control your cost basis. Never want to use market orders, always want to use a limit order. And then the hope is to buy the stock back at a lower price, pocketing the difference. You buy it back to close the position. You return the shares to the lender and pay any interest on the loan. It really is a loan. The broker-dealer is loaning you the shares, so there is some, again, fees and interest that's charged as long as the position remains open. So here's an example. Let's say an investor sells short 500 shares of XYZ stock, which trades at $20 per share, and collects $10,000 from the transaction, right? You are given the shares as a loan. You're selling them back to the open market. In this case, the stock XYZ was trading at that time $20 per share. You collect $10,000 from the transaction. Let's say the stock falls to $15 per share. In that scenario, the investor could repurchase 500 shares of the stock for $7,500. Once that transaction is completed and the XYZ stock loan is repaid, the investor has pocketed a profit of $2,500 from that short sale. So let's get into the VectorVest program. And I think our first part in identifying market direction, pretty easy today, right? We've got nothing but red lights almost. 3 yellow lights over 18 tiles here. So the market has been falling quite a bit now for the last several weeks. Color guard is bearish. We don't advocate buying any stocks at this time. We got an RT kicker combo down signal. That's 5 over the last 6 days. So as of right now, what's today? August 17th. The market's still falling, and your option is to not buy stocks, of course. But if you choose to play the market to the downside, short stock positions can be extremely profitable. So I'm going to go into a market timing graph because I'm going to show you kind of a real life example here on market analysis first and then stock selection. So we're looking at the VectorVest composite over the last year. 52-week high was back on July 31st, so almost 3 weeks ago. I'm going to put our RT combo signals on. Just zoom in here. We received the first RT combo signal, down signal, on August 3rd. Now the market had been going up nicely. You could see a number of bullish RT combo signals along the way. Those signals let traders and investors know that it is okay to buy stocks. So at that point, you're accumulating long positions. You're managing them accordingly. But once the market rolls over, got a big bearish engulfing pattern here. Market finally confirmed and rolled over. We got a RT combo down signal on August 3rd. Another one a couple of days later. So if you're more of an aggressive trader, you might be looking to add a short position or two to your portfolio as a hedge against the long positions that you're currently holding, right? That's what RT down signals mean. RT combo kicker down signals. That's what they mean. Means don't buy stocks. The market's falling. It's doing so with increasing momentum. If I change our layout to the GLB RT kicker, momentum is increasing to the downside. You want to add a short position or two as insurance against the long positions that you have. That is a solid decision. That's a solid choice. So August 3rd was the first down signal. If I go to Unisearch now, and I'm going to open up our searches short folder. And again, this is the VectorVest edge. Not only market analysis and market signals and guidance, but stock analysis. Earlier I said that we would advocate for you to buy safe, undervalued stocks rising in price in a rising market. So let's flip that over and let's look for stocks that are risky, that are overvalued, poor fundamentals, poor earnings growth, sell ratings, low RTs, right? These are the characteristics of a stock that we would consider shorting. So I'm going to go into a search here that's called Doug's Downers, one of the better shorting searches in the Unisearch tool. And first off, the parameters. So we're going to look at some of these parameters here. Earnings per share less than 0. Okay, so every stock in the list has to have negative earnings. Earnings growth rate less than 0. So their earnings growth rate has to be negative. Stock price greater than $5. You can increase this. This is, I think, an important parameter in this search because when you're shorting stocks, lower dollar stocks aren't often available to short. I've seen stocks above $5 but below 10 that I've tried to short in our swing trading coaching group account in that portfolio, and I haven't had success. I've always gotten the message that the stock is not available to short. So you might want to just increase the price, $10, $15, $20, just to make sure that the list is going to contain stocks that you are able to short. So I'm going to do that here, price greater than $10. The stock recommendation equals a sell. So we know what that means. The stock is falling. It's below our 13-week moving average. And two very important indicators here. RS less than or equal to 0.75, RV less than or equal to 0.75. So both of these indicators, we want the values to be below 1. High RS stocks are safe stocks. High RV stocks have good price appreciation potential over the long term. So low RS stocks are risky. Low RV stocks are stocks that do not have favorable capital appreciation potential long term. The sort is earnings yield divided by RT ascending. So if we were looking at earnings yield divided by RT descending, we would look for the best combination of earnings yield and relative timing. Here we're flipping that over. We're looking for the worst combination of earnings yield and relative timing. If I were to run that search now on August 3rd, that was the first RT combo down signal. Here is the list of stocks that come up. All of them are over $10. They're all grossly overvalued. They have low RVs, so not favorable upside potential. Low RSs, they are very risky investments. Relative timings are all below 1, so we know that they're in downtrends, short-term downtrends. And if we look at the CI indicator, which is not a part of the scan, they're all below 1 as well. So not only is the short-term trend down on all of these stocks, the long-term trend is down as well, right? CI looks at long-term price trend. Above 1, higher above 1, closer to 2, you're going to see those bottom left to upper right price charts. We're going to see most likely upper left to bottom right price charts here if we're looking over the last year. Negative earnings, negative growth rate, those two indicators were baked into the scan. So if I were to run just a quick test of the top 10, from August 3rd till now, about 10% down, which means a 10% return for us. Now, I'm not saying you would have shorted all of them, but the point of this quick test, and I'm going to actually, instead of the NASDAQ, we're going to look at the VVC. We want to compare the performance of these poor, fundamental, risky, overvalued stocks compared to the market. Are they falling along with the market? Are they underperforming the market? Are they outperforming the market? As a basket of 10, again, I'm not saying you would have shorted all of them, but the point is these types of stocks are the stocks that you want to short. 2 winners, 8 losers, that means 8 winners and 2 losers, right? We want the stock's price to fall, and the hope is that they do fall, and we buy the shares back at that lower price, and we collect the difference between what we sold them at initially and what we bought them back for at a later time. And there are a lot of other searches in the Searches Short folder. So look into some of these searches. Make sure that they're returning stocks that are overvalued, that have poor fundamentals, low RV, low RS, that they're falling in price. And if I go to graph them, just quickly, put the recommendation on. All I need to see is price and the recommendation. Look at the last year for this stock, KPLT. This is not a stock that I would be interested in buying at any time. An indicator that I like to use, if I put on a 200-day simple moving average, it's just a good moving average to help us identify long-term trend. So currently the price of the stock is below the 200-day moving average. It's pretty much been below the 200-day moving average for the whole year. Generally don't like to buy stocks that are below the 200-day moving average. So this is something that I might look at. If we just look at all of them, these are perfect short candidates. Not a lot of data on MLYS, but upper left to bottom right price charts for the most part. Right? These are the stocks that you want to short. Top VST stocks, high VST stocks in the stock viewer or the S&P 500 watch list. Any of the stocks at the top of the S&P 500 watch list are stocks that you would want to buy. High RVs, high RSs, undervalued stocks, strong RTs that are in uptrends. You just flip that whole mentality over. And these are the stocks that you really want to short. So folks, thank you for joining me today. Hope you guys enjoyed the presentation. I'm not saying, hey, let's go run out and short 10 stocks on Monday. But moving forward, if you find yourself in a position where you have long positions, long stock positions in your portfolio, the market starts to roll over, maybe it retraces from resistance or we got an RT combo down signal, and now you're a little bit better equipped to take advantage of that down market and hedge against long positions, short a stock or two, as insurance when the market begins to roll over. So have a great weekend, everybody, and we'll see you next week.
Yeah.